Well, we're fast approaching the end of the year and time to take a look forward to 2012 and have a look back at real estate in 2011. Who better to do that with than the CEO of the REIV, Enzo Raimondo. Enzo, how do you sum up the year for Melbourne real estate?
Look, 2011 hasn't been a good year for real estate across the board. It's been a very soft year. Demand has been low. Prices have gone down in some parts of the market, certainly the top end of the market. The middle a bit less, and the bottom probably has been about level. So we haven't seen any huge price growth in the market at all.
Obviously, clearance rates are something that a lot of people take notice of.
Well, clearance rates are a barometer of a part of the market. You know, about 30% of transactions are auctions, and clearly they're down. They're around the low 50s from the peak of the 70s and 80s we had a few years ago. There's no doubt that the cycle has changed. Instead of a peak, we're at the bottom end of a cycle now, and you know, I don't think it'll change for the rest of the year. We're nearly at the end of the year, and I think that we'll just see the same sort of conditions through till mid-December. It's
a positive for people looking to get into the market, though, isn't it?
Look, it's probably the best time for first home buyers and others to look at buying a property either to relocate or as an investment. I mean, given the volatility in the stock market, you know, property seems pretty stable, but we have seen a slower market this year. There's no doubt about that.
Looking into your crystal ball, what does 2012 hold for the real estate market in Melbourne?
There's no doubt that what's happening in Europe and the US in terms of confidence is affecting Australia. I mean, the economy in Australia is quite sound. The Governor of the Reserve Bank has said that the economy is pretty good. Our focus is really Asia. Our trading partners are Asia, China, India. We've seen some announcements about, you know, some more mining exports to India, which should help the Australian economy. So really, the economy in Australia is quite sound. The fundamentals are good. Our banking system is good. But unfortunately, media about what's happening in Europe and the US in Australia dampens confidence. You know, there's always that uncertainty. Will it happen here?
We've seen a lot of those articles this year on real estate bubbles, and it's going to burst and prices drop by 50%. None of it's happened so far to that degree.
No, look, well, I've been reading about property bubbles for the last decade or 10 years, and you know, every few years someone from America or Europe will say that Australia's property prices are overvalued by 50% and they'll drop. Of course, we're going to get some volatility short term, but the trend over the last 10 years or more has been upwards. I mean, if you look at the median price today to what it was in 2000, we're more than double. What will it be in another 10 years? Probably double again to over $1 million. So long term, the price trend is upwards. Yes, we're going to have those short-term fluctuations.
Interest rates, any predictions there?
Look, that's a really hard question, Des, but we've had 0.25% recently, which is the first one in a couple of years, cut that is. I think there's room for some further cuts, but I think the Reserve Bank will be looking at what the economy is doing generally. I don't believe they really want to cut rates because they think there's some strength in our economy, but given what's happening in Europe, they may have to cut it again between now and the end of next year.
All right, Enzo, we're going to put you under the pump. 5 words or less, summing up the market next year.
6 words, better than 2011, location, location, location.
It's an oldie but a goodie. You're the boss, you can have one extra word.
Thanks.
There you have it. I guess, yeah, location, location, location. The same old story in 2012.